So if you've been studying the short-term history of the stock market, we've been known for selling off hard on Fridays, especially when the SPY has a big micro run up, and it recently bottomed in the low 380s, topping out in the 407s today, which is a very big micro run up. So I strongly believe that this is going to be a micro bull trap heading into tomorrow, and I'm going to be sharing with you my top 3 option plays, the same day expirations that expire tomorrow, and we are going to be put option focused. We're going to be discussing SPY, Tesla, Roblox, and EOG. So there's actually 4, and I'm going to show you how to trade the best setups at the best prices. Fridays have been known for being my most rewarding and most profitable days, so I strongly believe that I'm going to have a very successful trading day tomorrow. I'm going to share with you the plan right here. Let's get right into the analysis. So in terms of the best setups to be trading at the best prices, first things first, let's go over the SPY. So in terms of the SPY, it ended up turning that key level at the market open we discussed yesterday, that $397 to $400. If it breaks out, reacts to support, it's gonna start to rally, and that's what occurred. And then the next target for the SPY would be for that gap that's waiting to fill above. There was a gap to fill above at $408.32. As you can see, this is a big downside potential level. Check this out. Right here, it previously closes at 408.32. The next day, it gaps down and it sells off hard at $390. Right here, it gets to a high of 406.40, 406.08, 2 days in a row. It sells off to 396 to 394, right? Big downside level from this resistance level. And SPY recently bottomed at $380. We had a nice micro pump, and I believe that we're selling off tomorrow. I'm extremely bearish. I don't think people are going to want to hold this long over the weekend. I think there's going to be a lot of heavy selling pressure. So what I'm going to do is I'm actually going to explain to you how to trade this if the SPY gaps up tomorrow in the morning, or if it gaps down tomorrow. I'm going to show you how to trade this both ways, no matter what it does in the pre-market tomorrow, right? So here's the game plan. In terms of the SPY, it closed at $405.31, right? So this red line, this is where we closed at. Right now, during extended hours trading session, futures are slightly down. It's at 406.65. With that being said, if the SPY and if stocks gap down, so if they gap down tomorrow, meaning they open lower than the closing prices of today, Thursday, tomorrow, which will be the previous closing prices, if they gap down, the best entry for the put options is going to be the previous closing price, the closing price of Thursday, right? So if the SPY gaps down, 405.31 is the best price to buy the puts and ride it back down to about $398 to $400. In between that zone, I would say, yeah, $398 to $400 would be the profit taking target in that zone. Now, if the SPY gaps up tomorrow, here would be the best things you can do if it gaps up tomorrow. If it gaps up tomorrow and you're going to play the resistance level, $408.32. 408.32 would be the key level for tomorrow. Now, if it gaps up tomorrow, another thing you can do is, and this is what I'm more interested in doing, if it gaps up, wait for it to go green to red. As soon as it goes red, as soon as it goes under the closing price of 405.31, buy the puts, ride it back down to $398 to $400. That is the game plan for the SPY. In terms of the expirations, I'll be going with the strikes that are at the money or barely out of the money in the same day expiration for the SPY. That is the game plan, put option focused. I explained to you how I'm planning to trade this both. How I'm planning to trade this if it gaps up or gaps down on the put side. Remember, if they gap down, the best price is the previous closing price. All right, this is one of my favorite setups, Tesla. So in terms of Tesla, we are currently at that key level. There was a gap to fill above on Tesla stock right here at 674.90. I tried buying the puts. I bought the puts. I got stopped out instantly for a small L. And it's a good thing I got stopped out quickly because those puts are down substantially now. I don't play with Tesla. When I trade Tesla, I get in and out very quickly when I'm wrong. When I'm right, I try to hold it out a little bit. But I don't hold losses too long on this stock. If it can't work at my key level, then I'm going to get out. So the zone we discussed was that 674.90 gap fill. As of now, it has failed to have a reversal at that level. With that being said, the previous support, overall previous support, was at $700 to $720. That is our overall resistance level. So here's how I'm planning to trade Tesla tomorrow. If it goes green to red, so if Tesla stock gaps up tomorrow and it goes green to red, meaning it gaps up tomorrow, it goes above 707.73. As you can see right now, it is gapping up. It's up during after hours. I'm going to wait for it to go red. I'm really not interested in playing puts at resistance, which would be towards 720, 730. I'm not too interested in doing that. For me to play Tesla tomorrow, what has to happen is for the put side, it has to go green to red. So if we can get a strong green to red move, then I will look to play the put options with a very, very tight stop loss. And if we get the green red to move, my target would be, if we can crack 707.73, I'll look to play the puts. And my target would be 670s. 670s would be the target on that. So I'm looking to make about 40 points profit per share. The put options are going to be very, very cheap tomorrow. And hopefully these gap up, they'll be even cheaper. So the puts are going to be extremely cheap on Tesla tomorrow. And I'm very interested on the put side because they're extremely cheap and we're due for that pullback. That's the game plan for Tesla. Wait for it to go green to red. Say it gaps down. It doesn't go green to red. Then, like I said, the previous closing price, wait for it to rip back up to the previous closing price, 707.73. You see it react as a resistance. You see bearish confirmations. Play the puts. Ride it back down to the 670s. That's the game plan for Tesla. If it cracks 670s, it's going to be a bloodbath to 655. This stock has so much strong, heavy support for now 2 days in a row in the 650s. Very, very heavy support at 650s. If we see a strong bounce at 650s, I might look to scalp a call as well. But overall, I'm put option focused. I'm extremely bearish for the market heading into tomorrow. And like I said, if they gap down, the previous closing price is the best entry. If they gap down and you choose not to wait for the previous closing price, make sure that it's not a massive gap down. Make sure that it's not too far away from the previous closing price, because if you do get in and it rips against you, you will be exposed to a much bigger loss, because if it retraces back to the previous closing price and there's a big gap to fill, a big profit of margin to fill, it's going to be a big loss. And there's no guarantee that it's going to have a reversal once it hits the previous closing price, right? So just be aware of that. Now, let's go over Roblox. Roblox has filled the gap. So this is very simple. This is very simple how I'm playing this one. There's a gap fill at $30.06. Right now we're at $30.59. So if Roblox gaps up tomorrow, I'm going to wait for it to crack like $30. If it can crack $30 to $30.59, go from green to red, I'll look to play the puts. If it gaps down, I'll look to get in at the previous closing price, $30.59, right? So that's the game plan, right? Doing the same thing with all these stocks. In terms of my favorite ones, SPY is definitely up there. I really like Roblox. Roblox tends to be a really good one to trade it in the morning. Tesla is going to be a little challenging, but I like that one too. And then I would say the one that should definitely work well is EOG, saving one of the best ones for last. So the deal is, this stock does have wide spreads. So you want to look for the contracts that have the most thin spread, that have some volume coming in. Right now, it's the 135 strike. I alerted these 135 strikes today at $1.30. They're worth $1.80 to $2.45 right now. They absolutely printed. This is the one good trade idea I had. I didn't like its price action, so I decided to just sell it like break even basically. But I really did like it. I like the idea of just holding it. Some students chose to hold it and they're doing very well right now. I alerted the put options right here when this was at 135.60 towards the top. It crashed all the way back down to fill this gap. So here's the deal. This is going to be a bloodbath tomorrow. I'm extremely bearish on this stock. What we're looking at in terms of a situation like this, we got this red bearish candlestick right here. We got this red bearish candlestick right here. It sells off the next day. Red bearish candlestick right here. It sells off the next day. You have a gap to fill below at 129.25. If it cracks that, you have another gap to fill below at 122.05. We're at the all-time highs. It's looking extremely bearish, and it looks like it wants to pulled back to start to fill those gaps that are waiting to fill below. If you just study how it reacts towards these all-time highs, it's a big downside level, $128 all the way down to 121 right here, $132.35 all the way down to 116.77. Do not underestimate how big this stock can crash. And this one is detached from the market, which is one of my favorite reasons to trade it as well. The only disadvantage is it's not the most liquid and the spreads are a little bit wide, but if you get a good entry and you're not going far to the money, it's completely fine. So in terms of the play tomorrow, like I said, we have some people still holding this one. If you want to get back in or if you want to trade this tomorrow, the game plan would mainly be $133.72. If we can't get a pop back towards that, then I'll look to start deploying a position on the key breakdown below $133 to $132.70 in between that zone. Look to take starting positions on puts. I am extremely bearish on this one. I am willing to not get in at the previous closing price on this one. Just understand, if it gaps down, which it currently attempting is, and you don't get in at the previous closing price, you are exposed to more risk because you're not getting the best entry and it can rip back up to the previous closing price before it spikes. I had a trade on Snapchat today, and that's exactly what happened to me. I didn't wait for it to go back to the previous closing price. I bought puts towards the 1380s, and then I got squeezed instantly as it ripped back up to the previous closing price. If I went with the previous closing price, I actually would have been getting in right here for a small 10% win, which is much better than losing like 30-40% on the contracts. So with that being said, there are certain rare situations where I'm willing to not get in at the previous closing price. And I would say EOG is one of them. It's just the daily chart looks so bearish. We have a strong bearish confirmation right here. We have gaps that are waiting to fill below. We have a strong history of this stock faking out towards all-time highs, going back to fill the gap below, going back to fill the gap below. You see how it fills this gap the next day. See how it fills this gap the next day. It already filled the gap, going basically green to red on the day, and there's two more to fill below, and history shows it has the momentum and price action to have a big move tomorrow. So in terms of the strike prices that I will be interested in terms of tomorrow, I will be looking at the $133 strike. That's my main focus heading into tomorrow. I'm planning to go slightly out of the money, and I'm looking into that $133 strike, because I believe we can have a big move to the downside. So 133 strike is what I'm looking into. If you're trying to, for those of you who like going further out of the money, obviously you want to do it in a situation where stock can have a big move in your favor. And I do think this can be one of those situations. So if you are going to, trade multiple strikes or go further out of the money, I would consider a 131. I would consider a 131 strike as well. So 133 strike, 131 expiration will be tomorrow. I think those are going to print personally. I'm planning on the safer side and going with the 133. I might do a small position on the 131. And just know, if you're going further out of the money, scale back in your position size, right? Because the returns are going to be much bigger. The contracts are going to be a lot cheaper. And if you're wrong about it, the percentage loss is going to be a lot bigger than you would normally have. So just make sure, if you're playing the out of money route, that you scale back in your position size. Even with same day expirations, make sure you're scaling back in your position sizes. These are going to be a lot more volatile. And I wouldn't scale in whatever you're planning to put in. I wouldn't scale in all at once. I would put in about 60 to 70% on your first entry, and then 40 to 30% on your average, wherever you're planning to average in. I wouldn't get in right away, but this looks like it's going to be one of those situations where you kind of do have to get in right away. I'm looking to get in right away towards the morning, and then just add even more size than I plan to do if it looks very bearish in my favor. So I'm not waiting for the previous closing price, especially if it gaps down. You can see right here, all-time highs at the time, it gapped down, never went back to the previous closing price. So what you can do is, if you want to play it even safer, instead of waiting for the previous closing price, you can wait for a double top to form. So if it's crashing, just wait for it to go back up. And then once it forms resistance and forms a double top, that's where you look to enter, right? I'll show you what it is that I'm talking about, because I remember it formed a double top on this day. And I didn't get in because it wasn't at the previous closing price. Let me show you exactly what it is I'm talking about. right here, this is what I'm talking about. It gaps down, it forms resistance, goes back down towards lows, forms resistance, starts to break down, boom, get in on the double top, right? That's what you can do for tomorrow. I think that's completely fine. But guys, I'm telling you, this is the number one A1 setup. These can print like crazy. Just understand, if these don't work out due to the wide spread, they're going to take a hit. They're just going to take a hit if it doesn't work out in the same day expiration. So just expect, if this doesn't work out, we're looking at about a 40 to 50% loss on the contracts. So whatever you're putting in, just understand the risk is 40 to 50%. It's going to be greater on this play. If you're going on the out of money route, we're looking at returns. This can be like a 200% plus play. It really can. These can hit. This is like basically my favorite setup. It's detached from the market. Just understand that it has a wide spread, right? So wait for the spread to kind of develop a little bit and then submit your order, not at the ask, get filled. So right now, like the spread is 120 to 170. The spread is 75 cents to 130, right? Look at the last price. Look at where the last prices have been filled, and then put your order slightly above the last price, which is going to be towards the upper middle, right? So just understand this is a different type of way to play it. But I do believe these are going to print, and I do believe the risk will be worth taking. So I would say EOG is definitely up there with my favorite heading into tomorrow. As we have two gaps to fill below, we have the bearish confirmation. EOG is going to be the number one A1 setup. So I went over EOG, I went over Tesla, I went over Roblox, I went over SPY. In terms of confidence and in terms of my belief in it's just gonna win and it's gonna work, I would say EOG. It's just with the market right now, it's just today was very tough. I do think we're gonna sell off into Friday. It's just what I like about EOG is all of the confirmations had triggered and it's not following the market. I love that. I love trading stocks that aren't following the market. It can be very tough to trade a stock that follows the market at times. There's delayed reactions, and it's like you have to trade two at once. You have to trade the market and you have to trade the stock two at once, right? It can be confusing at times as well if there's delayed reactions. It's not the easiest thing to do. I really just like trading something that's completely detached from the market, and that's why EOG will be the number one focus for tomorrow. So I think these are going to do fairly well. I'm planning to do the 133 strike, and I'm also planning to buy some out of the money contracts at the 131 strike. So that's the game plan. But I'm telling you, man, this can really print. Like, man, if we get a big red day, like if we crack 129, if we can crack 129 tomorrow, and you got in towards this 129 strike, my gosh, the contracts are gonna explode. There's so much opportunity. These out of monies could be 10x. They really can be. If we can crack 129, these out of money contracts can 5 to 10x pretty easily. We need to crack that 129. So the goal for tomorrow is to crack 129.25. If it holds and starts bouncing, forms strong support, you're gonna want to lock in some gains, right? But if we can crack that 129.25, we don't have much support, and there's a gap to fill below at 122. The sky's the limit for this one. That's my number one play heading into tomorrow. EOG stock, that's that number one A1 setup. Just to understand the risk involved with trading that. In terms of anything else I'm not interested in anything else. I'm very selective. I have a very quality over quantity approach. And the top ones that I see are Roblox, Tesla, SPY, and EOG. I just think EOG is going to be that one. That's my personal favorite. I got to see how the market looks and reacts in terms of tomorrow. So yeah, that's mainly going to be wrapping up this video lesson. That's my number one A1 setup for tomorrow. If you do want to trade live with us at market open, that's going to be that first link down below in the description. Click that first link, read what's included within Trader Society. That's the private team, that's the private group. And you can start trading with us live at market open. We're going to have that live trading stream where you get to see my open and close positions. You get to see the live trading commentary, the charts, the price action analysis, me trading live. You also get access to the chat room, to the video lesson library, where you're going to learn how to trade the price action, where you're going to learn how to trade both ways, long and short, calls and puts, the unique gap strategies that I've created, risk management, position sizing, psychology, mindset to trading. And then, of course, the chat room, the real-time trade alerts, the price action analysis, the stock watch list, the community, the networking opportunities, the Discord. You can add us on a friend as the server, right? Answer your questions live on spot during the live streams and within the chat. So that's going to be it, guys. If you do want to sign up, it's going to be that first link in the description. As soon as you join, you get instant access, and it is lifetime access. Everything within Trader Society is lifetime access. It is a one-time fee. I'm telling you, this would be the best time to get in. In terms of tomorrow, it should be a green day. We should have a very nice green day. I'm going to come back strong tomorrow. Tomorrow should be phenomenal. I will see you guys at the live trading stream tomorrow, and let's absolutely crush it and end this week strong, man. I will see you guys till then.